Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Elon Musk is considering laying off more employees just weeks after he laid off half the company's workforce, reports Bloomberg. The fresh job cuts are expected to target employees in the sales and partnership teams of Twitter. The report adds that the layoffs could be announced as soon as tomorrow.
EdTech startup SkillLink acquires Creo, an experiential learning platform for tech careers, in an attempt to enhance its offerings in the higher education space. With this acquisition, Creo will operate as an independent brand under the SkillLink group.
Space tech startup Pixel set to launch its third hyperspectral satellite named Anand on board an ISRO PSLV rocket scheduled for liftoff on November 26. The launch is set to take place just a week after Skyroot Aerospace created history by launching India's first privately built rocket into space from ISRO's Satish Dhawan Space Center in Sriharikota.
B2B procurement marketplace ProMart raises $10 million in Series A funding round led by 6 Sense Ventures. The latest round of funding will be deployed towards international expansion, strengthening vendor partnerships and upgrading technological and warehousing capabilities.
NPCI is in talks with the RBI on implementation of its proposed December 31st deadline for limiting the volume cap of players to 30%. At present, there is no volume cap. According to PTI, a meeting was convened to comprehensively look at all aspects. Besides NPCI officials, senior officials of the Finance Ministry and RBI also participated in this.
Former U.S. President Donald Trump snubs Twitter after Elon Musk announces the reactivation of his account. More than 15 million Twitter users voted in a poll conducted by Elon Musk, where nearly 52% favored the return of Trump.
In a surprise announcement, Bob Iger returns as the CEO of Disney 11 months after leaving the company. Bob Chapek exits Disney after a tumultuous period at the helm. Iger will help the company's board find a new successor.
Well, those were the headlines that we're tracking for you this evening. But today, the government issued guidelines to guard consumers from fake online reviews of products. It will be come into effect from Friday. To begin with, these guidelines would be voluntary in nature and is introduced to bring about a level playing field. Our colleague Timsi Jaipuria spoke to Rohit Kumar Singh, the Secretary of Consumer Affairs, about the guidelines and the way forward. Take a look.
These are standards which have been developed by Bureau of Indian Standards. These are called IS 19000-2022. They will come into effect from this Friday. And these address how to handle fake reviews by the website. So every website will have a review administrator. There's a provision. And they have to conform to certain guidelines, a framework, so that the consumer, when it's buying something, when he or she is buying something from the website, his comfort level, his assurance is there that what he's looking at, the reviews, are reasonably objective and correct and trustworthy.
How will a consumer know that a review that he or she is reading is paid or unsolicited or is a genuine review? And does it also come on the website or the platform that there's an additional responsibility to actually see that fake reviews are not part of the review section that they have?
So there is a mechanism to filter out fake and non-genuine reviews. Paid reviews are admissible, but there has to be a disclosure. Like if you see the Google search engine, when you search something, the first 2-3 results will have an AD written as a prefix before the result. So that means it's an advertisement.
How do you see these guidelines being followed by the industry? Will industry voluntarily comply to these? Have you got any assurance from the industry? Industry was consulted as well?
Yeah, of course, industry was consulted. And I would also like to clarify that we are not starting from scratch. Many websites already have systems to handle fake reviews. But we want a level playing field and we want everybody to be at the same page when it comes to a mechanism to handle fake reviews.
Yeah. What sort of a review did you get from industry, whether they wanted this to be mandatory to begin with or they wanted voluntary compliance?
The industry wanted it to happen. We have not discussed the mandatory and voluntary part because it helps the industry also, because it helps the menace of the adverse review inducement by the competitors. So it helps the industry. It's a win-win proposition for both.
When it comes to penal provisions, what are they?
The penal provisions are same as are for under the Consumer Protection Act and Central Consumer Protection Authority rules. So if a review is fake and it is established, then it falls under the category of unfair trading practice, and the penalties will remain the same.
All right, the government has issued guidelines to guard the consumer against fake reviews. Moving on the hot seat today, we put the spotlight on employee volunteering platform GoodERA. The venture recently raised $10 million in its Series A funding round and plans to make employee volunteering accessible to every workplace. Investors in the round include Zoom Ventures, Elevation Capital, X to 10X, Nexus Venture Partners, Omidyar Network, and others. To tell us how GoodERA is combining social impact and employee engagement, and to talk about the road ahead as well, joining me now is its founder and CEO, Abhishek Humbad. Abhishek, welcome to Startup Street. You've said that you think of GoodERA as the Airbnb of volunteering. If you could elaborate on this, what is the pain point that you're solving, and how are you bringing technology and innovation to the volunteering space?
Sure. Thank you so much for having me here today. Yeah, as you rightly mentioned, we think of GoodERA as an Airbnb for volunteering, and volunteering is actually very, very difficult. For a company, right from a Fortune 500 company to a small startup, enabling your employees to volunteer is a big ask. From finding the right nonprofit from millions of nonprofits to finding the right kind of volunteering activity to actually doing the volunteering activity to measuring impact, it's a very big pain point. And that's where GoodERA comes in. We work with more than 50,000 nonprofits in more than 100 countries, understanding volunteering requirements of these nonprofits across different cause areas. So be it education, climate change, women empowerment, racial equality, and provide these volunteering opportunities to employees of our customers across the globe, making it very simple, very seamless, and making volunteering as simple as easy as booking a cab or getting a pizza delivered home. Which is where technology comes in to make it as simple and as seamless as possible.
Okay, so you're saying from finding the right nonprofit and finalizing the volunteering activity to logistics and impact measurement, your tech platform claims to do all of this. Abhishek, if you could share some use cases, if you could take me through your employee volunteering solutions, how are you simplifying volunteering and eliminating overheads?
Sure, absolutely. So we enable volunteering in a virtual, hybrid, or an in-person view. And there are different kinds of volunteering activities. So for example, in a virtual volunteering activity, one of our most popular activities is recording audiobooks for blind kids, where a team comes together on a Zoom call and records these audiobooks, which goes to a local nonprofit where the team is based. So the team can be based in San Francisco, in London, or Bangalore. There are local nonprofits out there. So what GoodERA does at the back end is partner with different nonprofits across the globe, offer these to employees of our customers, and every volunteering activity, GoodERA provides a MC or a host who actually conducts these activities and makes it a really, really fun and engaging experience. So for most of our clients, volunteering is also probably the most meaningful employee engagement, especially in this time where engagement levels are at an all-time low. So GoodERA does all the back-end work to enable employees to volunteer. And let's say for a company like IBM, which has 300,000 plus employees across the globe, how do you ensure that every zip code in the world, every cause area, there is something for every employee and team to volunteer? And that's what GoodERA provides.
Okay. All right. Let's now quickly talk about the $10 million that you raised recently. You plan to use the fresh funds to scale the team, technology, and the catalog. If you could elaborate on each of these plans, how many people are you looking to hire? What is the kind of innovation and expansion you're planning?
Sure, absolutely. So for us, the team for GoodERA is global. So we have a team in the US, in India, and across the world. So a lot of focus is to almost double our team over the next few months. We are about 150 people right now. The next piece is about building a nonprofit network base of nonprofits. So we work with more than 50,000 nonprofits. And how do you increase that so that every zip code, there is something for you to volunteer for? So that's second. And third is, how do you ensure that every volunteering experience across the world, any time zone, any language, is as great as possible? Our NPS has been wonderful. Employees love volunteering. They share it on LinkedIn. And that is something, is enabled by a very robust technology platform at the back end to coordinate all of this, right from nonprofits to MCs to volunteers to corporates, make everything happen together magically and seamlessly for the volunteers.
Okay. So, Abhishek, on one hand, GoodERA's technology simplifies volunteering, thereby offering millions of employees the opportunity to volunteer. And on the other hand, enterprises can provide on-demand, impactful and engaging volunteering experiences to employees worldwide. Tell me, what is the revenue model that you've devised for yourself? Who are you charging?
Yeah, so we monetize this by charging the corporates.
Okay.
So companies enable their employees to volunteer. They pay us on a per volunteer per session perspective. This is completely free of cost for nonprofits, and actually we solve volunteer management for nonprofits, which is a really big headache and an overhead for them.
Okay. Abhishek, currently GoodERA provides access to over 10 million employees through their customers, and you now aim to reach over 100 million employees by 2025. How do you plan to achieve this? Where do you see the next leg of growth coming from?
Sure. So GoodERA essentially operates majorly in the US market. We work with 60 of the Fortune 500 companies, enabling their employees to volunteer. That's more than 10 million employees across the globe. It's just adding more and more companies to our platform. We are the world's leading volunteering platform, and something we are proud of, that a company from India has actually become a leader in something really meaningful across the world. And as we add more companies, we add more employees. And second is also adding more categories beyond volunteering towards being a full-fledged employee engagement platform.
Okay. So what is the kind of social impact you've had so far? Like you mentioned, you have over 50,000 nonprofits as partners. For a developing country like India, what are the top priority areas?
So the top priority areas in India, for example, a lot of it is on employability. So a lot of volunteers on the GoodERA platform help youth become more employable through simple things like reviewing resumes, helping build a better LinkedIn profile, helping in mentoring. And that has led to access to jobs and more higher income for a whole bunch of folks. And imagine, employees from the world's best companies helping you build a better resume so that you could get a job. It was never ever possible. And it's so much fun for the volunteer as well to do it. So it's a win-win for everyone. And we are seeing, tremendous social impact across cause areas, right from, let's say, employability to, beach cleanups and park cleanups, to providing, electricity and other services to bottom of the pyramid. So a whole bunch of different volunteering driven initiatives that impact a whole bunch of millions of beneficiaries across India and across the globe.
Okay, Abhishek, we wish you the very best in all your goals, and, keep creating this social impact that you're having. And again, wish you the very best with all your goal plans that you've set for yourself. Many thanks once again for joining us on Startup Street.
Thank you so much for having me. Thank you.
On that note, it is time for us to head into a short break. But coming up next, early-stage venture fund Pi Ventures raises $8 million from British International Investment, adding to the corpus of its second fund. We will be joined by the founding partner, Manish Singhal, on the other side. Stay tuned. Welcome back. You're still with us on Startup Street. Now, early-stage venture fund Pi Ventures has received fresh investment of $8 million for its second fund from British International Investment, which is UK's development finance institution and impact investor. Now, Pi Ventures, which backs disruptive tech ventures in the AI and deep tech space, had announced the first closing of its second fund at over 300 crore rupees earlier this year. Now, to talk about their second fund, their interest in deep tech startups and their future plans, we are now joined by the founding partner of Pi Ventures, Manish Singhal. Manish, thank you so much for joining us on the show today. So there remains a significant funding gap in India for early stage technology businesses. You invest in early stage companies. How does your second fund address this gap?
Thank you so much for having me on your show. Funding gap in early stage in India is, especially in deep tech, in my belief, is not by the lack of money, but it's lack of understanding of the businesses. Every fund tries to do deep tech, and we are also doing that. But developing an understanding of which deep tech ventures are going to work, which will not, will help make those capital move in that direction. So we now, you rightly said, we are doing our second fund. We want to raise $100 million in this fund. We're almost close to 70, 75 with the BII coming in. And just like Fund 1, we come in early in our companies at seed stage, pre-series A level, invest $1 million to $1.5 million, sometimes $2 million, and then work with the founders to build those companies.
Right. You're a venture fund that invests in disruptive AI and deep tech startups. Take me through which sectors within this are particularly exciting for you guys.
Actually, we are quite sector agnostic. So Fund 1 was really focused on AI, and that's our sort of mainstay. We continue to look at AI as a novel tech. We look at applied cases of AI across healthcare, enterprise, and multiple sectors. We have started to look at infrastructure side of AI as well in this fund. Themes like observability, etc. And then there are other sectors also which are looking very interesting in this fund, right? The whole physical side of innovation has been rather, I would say, unexplored in India. But we're finding some very interesting companies driven by innovations in material science. How do you create sustainable food, for example? How do you create milk proteins without starting from milk? How do you create artificial meat without starting from an animal? Or in nanotechnology and in biotechnology, space tech as well. We had backed a company called Agnikul, which is doing very well in space tech. So now in India, we are finding that deep tech has cut across many different themes. And we are looking at all those themes in Fund 2.
Manish, this is Shruti quickly joining in. With the BI investment, the fund is currently tracking confirmed investments of over 530 crores and plans to finally close in the first quarter of calendar year 2023 in the range of 565 to 750 crores. You mentioned 775, I think. This is a big fund. What is exciting investors in deep tech and the other sectors that you just mentioned?
Sure. I think, so it's 750 crores, just to be very precise. So I think what we believe in is that India can create companies which can solve global problems. And that's what we are looking at. That companies from India in deep tech should be able to compete with the best in the world. That's how we have seen in our Fund 1 companies. That's how we are looking at Fund 2 companies. The advantage of doing deep tech companies in India is one of them is that they are very capital efficient compared to building the same companies somewhere else, some other part of the world, right? So essentially, deep tech in India is very exciting simply because you can create global companies from here and at probably 1/10 the cost of that it would take to create anywhere else.
All right. Okay. Manish, how many companies are you looking to invest in with this fund? What are the ticket sizes of the investments that you plan to make? Also, how soon? Have you already made some investments? And apart from funds, what else is on offer?
Sure. So we are going to make 25 investments from the fund 2. We have already made 5 investments, which we have announced. And a couple of them are in the pipeline to get announced in the next couple of months. We typically get in at seed stage, pre-Series A stage, or sometimes Series A stage. So our first check is typically $500,000 to, let's say, 1.5 to 2 million on the higher side. And then we follow on, as our companies grow and raise more money.
All right, let's take stock of your first fund as well. You invested specifically in companies offering AI-based solutions, like you mentioned to us, like Vaisa, Agnikul, Niramai, and Locus. So how is your fund performing? Have you made any exits as of now? Are you looking to make any exits?
Fund 1 is actually doing very well. We've got 5-6 companies doing really well. The names that you just mentioned, along with Pixis, which is also very fast-growing company, one of the fastest-growing companies I have seen in my career, actually. And we have made one exit that we did it back in 2018. It was a smallish exit, but our most meaningful exits are likely to come from 2023 and onwards. So we should be able to return the fund in the next 2 to 3 years. That's how we are thinking about it.
All right, so most of your meaningful exits in 2023. All right, but Manish, how do you view the investment climate currently, and how do you see it going forward? What's the outlook for 2023?
I think overall there has been a slowdown. There is no doubt about that, right?
Yes.
As a macro level, trend, but if you look at, so macro level sometimes confuses you and doesn't give you the micro level picture as clearly as it should. But within that macro level slowdown, what we have seen is that if you are building something which is valuable to someone, then there is enough capital available for that. and enough customers willing to take your product.
Okay.
So in our, especially in our deep tech space, where companies are building something valuable for a global customer based on a very disruptive innovation, we have actually not seen a slowdown at all in the early stages. In fact, we are meeting more and more companies. We've done 5 investments in the last 1 year. We are on our way to do 2 more shortly in the next couple of months. So we are not seeing slowdown, at least in the deep tech sector. Overall macro level, yes, there has been a slowdown, broadly speaking, which is affecting slightly more later stage companies.
All right, so no slowdown at the early stage level. And on that positive note, Manish, we'll have to wrap up our conversation. Many thanks for joining us on Startup Street, and wish you the very best for your second fund.
Thank you so much.
All right, moving on. Ahmedabad-based Matter launches India's first geared electric bike. The core idea is to transform the vehicles industry by bringing new waves of electrification into vehicles, says Mohar Lalbhai, CEO of Matter, during a conversation with Parikshit Luthra. Lalbhai says he sees more of an opportunity by the latest launch and plan to manufacture 60,000 units annually. Here's a slice of that conversation. Listen in.
Fundamentally, if you look at it, India runs on motorcycles. I mean, the bulk of the vehicles sold in India are motorcycles, and 2 products alone don't really cut a long market. But having said that, today what we have shown to the world is that how a motorcycle, a true motorcycle, something that allows you to be in complete control of the powertrain, really will enable adoption, because this is something that people want, people are familiar with.
Right. Now, this is an EV market where predominantly you see scooters right now.
Yeah.
So why take a risk with a motorcycle initially?
Is it a risk? I mean, the world in India is very different. As I said, 1.4 crore motorcycles vis-a-vis 60, 70 lakh scooters. The reason for us is this is not a risk. For us, it's enabling India to really transition to electric technologies, and this was a product which was not really there. This is a segment which has not been addressed fully, and we felt that on our vision to change the landscape, this is what India needs today.
Okay, now tell us a bit about Matter. How many employees do you have? What about your R&D center and manufacturing locations?
So we are over a team of 300, closer to 350 right now, and in terms of R&D, we do our own components, so there's nothing on this vehicle which's been bought off the shelf. Motors, gearboxes, battery packs, the integrated power pack that we spoke about, all of this has been done in-house. We have a 50,000 square foot R&D facility with state-of-the-art equipment, all based in Ahmedabad. And this is where home for our innovation and disruptions are. In terms of manufacturing facility, we are in the process of, starting pre-production trials right now in the facility. Initial capacity will be 60,000 vehicles per annum. The idea is for us to set up a model manufacturing facility where we get everything right, and then use that to scale forward in the future.
Okay, so you've said that you will begin bookings early next year.
Yep.
When does the product actually hit the market?
So you're looking at the quarter after the next. So you're looking at April through June is where vehicles will start hitting the market. And it is closer to the summer where we'll be starting to hit almost max production capacity.
Okay. Tentatively, how would you like to price it? What will be the range?
It'll be sub 2 lakhs.
It'll be sub 2 lakhs.
Yeah, even including the top variant, it'll be sub 2 lakhs.
Okay. Now, in terms of investments, give us a sense of the kind of investments you have so far. What are in the pipeline? Who are some of the key players you're talking to?
So, in terms of investments, we've recently announced a closure. I mean, about 3-4 months ago, we announced a closure of a round where Capital 2B was the firm that led the round. It had seen healthy participation from other investors and HNIs coming in. And for us, capital raising is a journey. As we grow, we will be doing that process continuing forward. And for us, we generally end up raising capital when we need it. So we don't want to unnecessarily be sitting on too much cash to burn.
Will it be challenging to meet the new EV norms which are now coming into effect in terms of testing the ones that have been laid out by the MORTH. Also, the Ministry of Heavy Industries has laid down mandatory safety guidelines for electric batteries, electric two-wheelers, electric cars as well. Will it be challenging as a startup to meet those guidelines?
So when you're designing everything from the ground up, you never design for bare minimum essentials just to pass regulation. You are designing for something that actually is what the consumer needs, the product needs, and the use cases need.
And with that, it is a wrap on this edition of Startup Street. More news and updates continue on the other side.